Picture this. The world is panicking. Stock markets are crashing. Gold prices are fluctuating wildly. People are desperate to protect their wealth. But there's a small, quiet community that seems completely untouched by financial chaos. No flashy banks, no Wall Street panic, yet their wealth grows steadily year after year. How? This is the secret of the Amish hedge, arguably better than gold. And today, you're going to discover why Wall Street fears this strategy, why the ultra-wealthy are quietly learning from it, and how it could protect your future in ways no conventional investment can. Defining the Amish hedge. At its core, the Amish hedge is not just an investment tactic, it's a philosophy of wealth preservation and growth. Unlike traditional strategies that rely on stock markets, commodities, or digital currencies, the Amish focuses on tangible assets, self-sufficiency, and community-based resilience. The term hedge here is metaphorical. Instead of using financial instruments to offset risk, the Amish use lifestyle, labor, and resource management to create a buffer against economic shocks. They grow and trade goods, invest in sustainable tools, and manage assets that retain value even when traditional markets collapse. While gold is celebrated for being a store of value, it has its limitations. Its price can fluctuate, it can be manipulated by large institutions, and physical storage can be risky. The Amish hedge, by contrast, blends practicality with protection. Your wealth exists in assets that are useful, self-replenishing, and largely immune to government or market interference. Key components of the Amish hedge. Land and agriculture. The Amish invest heavily in land and productive farming. A plot of land isn't just a piece of property, it's a source of food, income, and generational wealth. Unlike stocks or gold, land provides immediate utility and grows in value over time. Community networks. The Amish rely on tightly knit communities to share resources, labor, and knowledge. This network acts as an invisible safety net. If one member faces hardship, the collective system ensures survival without depending on banks or markets. Tools and production. Amish families often invest in tools, livestock, and sustainable production methods. These assets generate continuous value, unlike gold, which sits passively. For example, a dairy farm or a woodworking shop produces goods that can be traded or sold, creating a self-sustaining wealth cycle. Debt avoidance. A critical aspect of the Amish hedge is living debt-free. They avoid high-interest loans and speculative investments. This ensures that when economic turmoil hits, they're not vulnerable to market crashes or creditor pressure, unlike traditional investors. Why it's considered better than gold. Gold can preserve wealth, yes, but it's passive and reactive. It only protects value, it doesn't generate it. The Amish hedge, in contrast, is active and productive. It generates wealth while simultaneously protecting it. By combining practical assets, community cooperation, and self-sufficiency, the Amish have created a model that is both resilient and growth-oriented, even during global financial crises. In a world where currencies fluctuate and markets fail, the Amish hedge turns risk into opportunity. It's a strategy that grows silently, steadily, and without the need for speculation, a method so effective that modern investors and hedge fund managers are beginning to study it closely. Introduction to the history. To truly understand the Amish hedge, we need to step back in time, centuries before Wall Street, before modern banks, even before gold became the symbol of wealth it is today. The Amish are a simple, devout community that originated in Europe in the late 17th century. They fled persecution, seeking a life of religious freedom, simplicity, and self-reliance. But in building this life, they stumbled upon a method of wealth preservation that was both practical and resilient, the foundation of what we now call the Amish hedge. Unlike the chaotic markets of today, the world back then was unpredictable in its own ways. Wars, plagues, and economic instability were common. The Amish quickly realized that relying on external institutions or conventional wealth could be dangerous. Instead, they focused on internal security, community, land, skills, and sustainable living. This approach allowed them to survive and even thrive through centuries of turmoil. Key historical principles. Land ownership as security. From the beginning, the Amish understood that land was more than property. It was independence and insurance against economic failure. By acquiring farmland, they created a tangible asset that provided food, income, and long-term stability. Unlike gold, which is stored passively, land could be actively used to generate wealth. Skill preservation. The Amish passed down trades, craftsmanship, and agricultural skills from generation to generation. Knowledge became a form of capital, ensuring that every member of the community could contribute to production and survival. Tools, skills, and expertise became as valuable as any currency. Community mutual support. One of the most revolutionary aspects of the Amish hedge is the social safety net built into the community itself. Members help each other with labor, resources, and advice. This system reduces risk significantly. It's nearly impossible for an individual to fail entirely because the community collectively absorbs shocks. Low reliance on external systems. Historically, the Amish avoided debt, banks, and speculation. This wasn't just religious doctrine, it was practical risk management. By staying independent from external financial systems, they shielded themselves from inflation, crashes, and institutional corruption, a principle that is still relevant today. Why history matters. Understanding the historical origins of the Amish hedge is crucial because it shows how resilient strategies often come from necessity, not theory. The Amish didn't invent this method to beat the stock market, they developed it to survive. And yet, centuries later, their approach offers lessons that modern investors ignore at their own peril. By studying their history, we see that wealth preservation doesn't have to rely on fancy algorithms or volatile markets. It can be rooted in simple principles: land, labor, skills, and community. This historical context also explains why the Amish hedge remains largely unknown to outsiders. It was never meant to be a marketing tool. Its power comes from quiet, consistent application over generations.
Introduction/lead-in. By now, you know what the Amish hedge is and how it originated. But theory alone doesn't protect your wealth. It's the practice that counts. So how exactly do the Amish implement this centuries-old strategy in their daily lives? Unlike traditional investors who rely on stocks, ETFs, or even gold, the Amish hedge is active, tangible, and highly resilient. 1. Land as a living asset. The first pillar of the Amish hedge is land ownership. Every family invests in farmland not just for future value, but for immediate utility, growing crops, raising livestock, or operating small businesses like dairies and bakeries. Self-sufficiency. The land produces food and resources for the family, reducing dependence on fluctuating markets. Income generation. Surplus goods are sold or traded within the community, creating a steady revenue stream. Value preservation. Unlike gold, which can be hoarded and fluctuate in price, farmland has intrinsic, tangible value that rises steadily over time. This is the first layer of their hedge, a living, producing asset that grows even during economic turmoil. 2. Tools, skills, and craftsmanship. The second layer involves investing in skills and productive tools. Amish families pass down trades like woodworking, blacksmithing, and sewing. Every member contributes to a skill-based economy, producing goods that can be bartered or sold within the community. Skill capital. Knowledge becomes wealth. The more skilled the family, the more resilient it is against economic shocks. Durable tools. Investments in durable tools and equipment allow the community to produce independent of external supply chains. In practice, this ensures that wealth isn't just stored, it's actively generated every day. 3. Community networks and mutual support. Perhaps the most powerful aspect is community-based risk management. Families work together, pooling labor, sharing resources, and providing support in emergencies. Risk diversification. One family's hardship is mitigated by the community. Invisible safety net. This reduces reliance on banks, insurance, or government assistance. Sustainable growth. Profitable initiatives are shared, so the entire network benefits. In effect, this creates a human hedge, complementing the physical assets of land and tools. 4. Minimal debt and conservative lifestyle. The Amish also follow strict principles of debt avoidance and low consumption living. They don't over-leverage or speculate, which makes them nearly immune to financial crises. No risky bets. Wealth grows steadily without exposure to market swings. Disciplined financial discipline. Saving and reinvesting within the community ensures long-term sustainability. Why it outperforms gold? Gold can store value, but it doesn't generate it. The Amish hedge produces a continuous cycle of wealth creation while safeguarding it against inflation, market crashes, or financial manipulation. By combining land, skills, community, and disciplined living, the Amish have a hedge that is both protective and productive, outperforming traditional safe haven assets during turbulent times.
Gold has long been celebrated as the ultimate safe haven. Investors around the world buy it during crises, believing it will protect their wealth. Bonds, real estate, and other traditional investments also promise stability. But here's the question: can these conventional assets really protect you during unprecedented economic turbulence? The Amish hedge provides a compelling alternative, one that is tangible, productive, and shock-resistant. Let's break down the differences. 1. Gold, passive protection versus active wealth generation. Gold is passive. It stores value, but it doesn't generate it. If markets crash, gold may retain its worth, but it sits idle, producing no income or utility. In contrast, the Amish hedge is active. Land produces crops and livestock. Tools and skills create goods for trade. Community cooperation multiplies output. Simply put, gold protects your wealth, while the Amish hedge grows it steadily. 2. Risk and market dependence. Traditional investments are highly dependent on external factors. Stock markets fluctuate daily. Bonds are affected by interest rates and inflation. Real estate can lose value in a downturn. The Amish hedge minimizes these risks by focusing on intrinsic value and self-sufficiency. Crops and livestock retain usefulness even if money loses value. Skills and craftsmanship generate continuous income independent of market swings. Community networks act as a natural buffer against individual financial shocks. This makes the Amish hedge far more resilient than gold or conventional assets during crises. 3. Inflation and purchasing power. Gold is often seen as an inflation hedge, but history shows that its real purchasing power can fluctuate. Prices can be manipulated, and hoarding gold doesn't guarantee protection against sudden economic shifts. The Amish hedge, by comparison, uses tangible, consumable assets like food, livestock, and tools, creates resources that retain and even increase utility over time, reduces dependence on currency or volatile markets. Essentially, it protects both wealth and lifestyle, not just a number on paper. 4. Longevity and sustainability. Gold can be lost, stolen, or devalued. Traditional investments can collapse overnight. The Amish hedge is built for longevity. Land and skills are passed through generations. Community structures ensure risk sharing and continuity. Sustainable practices create wealth that grows quietly but consistently. By combining utility, productivity, and self-reliance, the Amish hedge creates multi-layered security unmatched by any single financial asset.
So far, you've learned what the Amish hedge is, how it originated, how it works, and why it outperforms gold and traditional investments. But here's the critical question. How can you, in today's modern world, use the same principles to protect and grow your wealth? You don't need to move to a farm, avoid technology, or join a centuries-old community to benefit from the Amish hedge. Its principles are timeless and adaptable, allowing anyone to create a resilient financial system in their own life. 1. Invest in tangible, productive assets. Like the Amish, modern investors can shift part of their wealth into tangible, income-generating assets. Examples include rental property or farmland, provides steady income and retains intrinsic value. Equipment or tools for side businesses, generates products or services that can be sold. Precious metals with utility, think silver for electronics or industrial use, not just gold for hoarding. The key is that these assets produce utility and income rather than sitting idle like a gold bar in a vault. 2. Develop marketable skills. Amish communities pass skills from generation to generation. You can do the same in modern life. Focus on skills that can generate income independent of market fluctuations. Coding, design, or digital marketing. Trades like carpentry, mechanics, or electrical work. Any craft or service that can be monetized. By investing in your human capital, you create a productive hedge that works even when the economy struggles. 3. Build community and networking support. Amish communities rely on tight-knit communities to mitigate risk. In modern life, this translates to creating professional and personal networks for support, joining investment clubs or mastermind groups to share knowledge and resources, collaborating with peers on business or financial projects. A strong network reduces personal risk, provides opportunities for collaboration, and can act as a buffer during financial hardships. 4. Live below your means and avoid debt. One of the most powerful lessons from the Amish hedge is financial discipline. Avoid unnecessary debt and maintain a lifestyle that allows you to save and reinvest. In modern terms, limit high-interest loans and credit card debt. Focus on saving and reinvesting in tangible or skill-based assets. Adopt a conservative spending approach that allows wealth to grow steadily. This ensures that even during crises, your assets remain secure and your lifestyle is sustainable. 5. Diversify across practical assets. Instead of putting everything in stocks, crypto, or gold, the Amish hedge principle encourages diversification with utility, land or property, skills and education, tools, resources, and business investments. Each layer reinforces the other, creating a multi-dimensional hedge that is resilient in all market conditions.
You've journeyed through the concept, history, mechanics, and modern applications of the Amish hedge. Now it's time to bring it all together. The Amish hedge is more than a strategy. It's a philosophy that turns risk into opportunity, simplicity into security, and skills into wealth. This final section will provide a step-by-step blueprint for anyone who wants to implement the principles of the Amish hedge in their own life. Step 1. Assess your tangible assets. Start by evaluating what you already own: land, property, or any physical assets, tools, equipment, or resources that can generate income, stocks or gold, to see what portion can be redirected into more productive assets. Ask yourself which of these assets can produce value daily. The goal is to shift wealth from passive storage to active generation, just like the Amish do with farmland and tools. Step 2. Invest in skills and knowledge. Next, focus on human capital. Learn skills that are marketable and recession-proof. Invest in education, training, or certifications that increase your ability to generate income independently. Consider trades, digital skills, or crafts that provide tangible products or services. Skills act as a hedge within a hedge. They generate wealth regardless of market fluctuations. Step 3. Build your community network. The Amish thrive because of mutual support. You can replicate this principle today. Create a circle of peers who share knowledge, resources, or business opportunities. Join investment groups, networking communities, or online mastermind forums. Collaborate with others to reduce individual risk and multiply collective growth. A strong network acts as a safety net during tough times. Step 4. Minimize debt and practice discipline. Financial discipline is critical. Avoid high-interest debt and unnecessary expenses. Live below your means to free up resources for productive investments. Regularly save and reinvest in assets that generate utility or income. This ensures your wealth is resilient even during financial crises. Step 5. Diversify across practical assets. Combine all elements into a multi-layered hedge. Tangible assets like land, property, or equipment, skills and knowledge that produce ongoing value, community support and collaboration networks, conservative cash management, and disciplined lifestyle. Each layer complements the others, creating a hedge that is both protective and productive, far beyond what gold alone can offer. Final thoughts. The Amish hedge is proof that wealth doesn't have to rely on markets, speculation, or luck. By following its principles, self-sufficiency, skill development, community support, and disciplined living, anyone can protect and grow their wealth in a world full of uncertainty. While gold stores value, the Amish hedge creates value. It turns everyday assets, knowledge, and relationships into a resilient, multi-dimensional financial strategy. Remember, the secret isn't in chasing the latest investment trend. It's in quietly building practical, lasting wealth, one step at a time.